So here's a tweet by Eric Balkunas with a chart of futures ETFs that were issued over the last week. You can see basically all the different companies that issued these from Ether Strategy ETF and Grayscale. We recognize these names quite a bit as they've been talked a lot in the crypto ecosystem over the last few years. And it's important to note that these are futures ETFs. They aren't spot ETFs, which means that they are definitely different to the ETFs that have been filed around Bitcoin by BlackRock and others out there. These kinds of events are first steps to get the futures ETF approved because there are already Bitcoin futures ETFs approved. Don't forget to like, comment, and subscribe to CryptoSilix to make sure that you don't miss the latest news in crypto. The next steps are to get the spot ETFs approved, and once Bitcoin gets approved, it will become easier for Ethereum and other tokens and coins to get approved. It's up to the SEC to approve these ETFs, and we are in an interesting moment right now as the SEC is battling against some of the biggest tokens and claiming that they're unregistered securities. We can go back to the SEC recently losing the case with Ripple, where the judge said that the XRP is not a security, but it can be offered as part of an investment contract. Additionally, the SEC charges Coinbase for operating as an unregistered securities exchange, broker, and clearing agency. The SEC complaint alleges that Coinbase has been violating the Securities Exchange Act of 1934 by operating as an unregistered securities exchange, broker, and clearing agency. The SEC also alleges that Coinbase has been providing misleading information to its customers about the risks associated with trading cryptocurrency. Specifically, they allege that Coinbase has not adequately disclosed the risks of cryptocurrency volatility, hacking, and fraud. The SEC complaint notes that Coinbase had been allowing users to buy and sell cryptocurrency on its platform, which the SEC alleges is the same as operating as a securities exchange. Furthermore, they have been acting as a broker without registering with the SEC. Coinbase facilitates the buying and selling of cryptocurrency between its users, which the SEC alleges is the same as acting as a broker. Not to mention that Coinbase has been acting as a clearing agency without registering with the SEC. Coinbase settles transactions between its users, which the SEC alleges is the same as acting as a clearing agency. Aside from the regulatory news, there is now 25 million Ethereum staked, including the current queue, so there is 22.5 million ETH or $42 billion worth that is actively staking, which is now greater than all the market caps of every layer 1 there or any kind of other token out there, except Bitcoin, of course. So what is staking? Staking is the process of locking up ETH in order to participate in the validation of transactions on the Ethereum network. When you stake your ETH, you are essentially lending it to the network to help secure it. In return, you earn rewards in the form of ETH. Why is the increase in staked ETH significant? The increase in staked ETH is significant for a number of reasons. First, it makes the Ethereum network more secure. When ETH is staked, it is locked up and cannot be used to transact on the Ethereum network. This makes it more difficult for attackers to take control of the network. Second, the increase in staked ETH means that there is less ETH available to sell on the open market. This could help to stabilize the price of Ethereum and make it less volatile. Third, the increase in staked ETH is a sign of confidence in the Ethereum network. As more and more people stake their ETH, it shows that they believe in the future of the network. What does the future hold for staked ETH? The future of staked ETH is bright. As the Ethereum network continues to grow, so too will the demand for staked ETH. This could lead to even higher rewards for stakers, and it could also make the Ethereum network even more secure and decentralized. Speaking of the demand for staked ETH, the more the time passes, the more valuable ETH will become just like Bitcoin. This is because of the burn mechanism. What is the burn mechanism? The burn mechanism is a new feature of the Ethereum network that was introduced with EIP 1559 in August 2021. EIP 1559 has changed the way the transaction fees are calculated on the Ethereum network. Instead of miners receiving all of the transaction fees, a portion of the fees are now burned. This means that they are permanently removed from circulation. Why is the burn mechanism important? The burn mechanism is important for a number of reasons. First, it reduces the overall supply of ETH in circulation. This can help to increase the price of ETH Second, the burn mechanism makes the Ethereum network more deflationary. This means that the amount of ETH in circulation is constantly decreasing, which can make it more attractive to investors. How much ETH has been burned? Since EIP 1559 was introduced, over 4 million ETH has been burned. This represents over $16 billion at current prices. The majority of the ETH burned has been due to the base fee, which is the minimum fee that users must pay to have their transaction included in the block. The remaining ETH burned has been due to the tip, which is the optional fee that users can pay to have their transaction prioritized. What is the burn rate? The burn rate is the percentage of ETH that is burned each day. The burn rate has fluctuated since EIP 1559 was introduced. The burn rate was the highest in September 2021 when it reached over 10%. The burn rate has since declined and it's currently around 5%. That is going to be all for today, but I'm curious, what is your favorite coin? Are you an Ethereum investor? Let us know in the comments below. And lastly, don't forget to like this video and subscribe to CryptoSilix to stay up to date on the latest crypto news. See you next time.